Richard, so we're here today to talk again about HSBC. Last week we were looking at whether their headquarters should be moved from London over to Asia, and this week Lex is looking at what they should do with their North American operations. Can you tell me a bit about them?
Yes, they've been there for quite a while. They went in the 80s when they bought Marine Midland Bank, and they exited that in 2009. So they've been doing a bit of attack and retreat. They then spent $16 billion to buy Household Finance Corporation, and that was in 2002, and they've closed that down, so that's been shuttered. And then they bought a smaller card operation, and that's been sold to Capital One. So there's been a lot of in, out on the commercial front.
And so has it been more than just bad commercial decisions, though? There's been some regulatory issues.
There's been some very painful regulatory issues. They fell foul of the US Department of Justice and settled for money laundering and sanctions busting. And they've just been told by the monitor, a federal monitor, that their compliance is still not passing muster. So there are a lot of itchy things going on in North America for HSBC at the moment.
Okay, and it's a pretty small part of their operations, isn't it? I mean, HSBC Asia is about 80% of their pre-tax profit. North America is less than 10, isn't it? What's their other results then?
Yes, I mean the return on risk-weighted assets in North America has been about 1% for the last 5 years or so, and approximately I think 3% in Asia. So you can see there's a big gap between the performance there, and then more broadly, if you look at cost efficiency, which is always a good idea when you're trying to check a bank's returns, then the cost-to-income ratio in North America is closer to 80%, whereas it's only just over half of that in Asia. So there are compelling financial reasons to have a very good hard look at this business.
Okay, so going forward, we'd sort of expect that it's Mr. Gulliver's and it would be having some explaining as to why he wants to keep this, or maybe it might be going out in the future.
Absolutely. If he hasn't got a compelling reason for staying there and he can't see a short way to boost returns, which would have its dangers potentially, then I think this adds to the list of shouldn't we exit or move back to the markets that we feel more comfortable in.
Okay, excellent. Possibly keeping some trading credit there, isn't that? That's right. Yeah.
Got to clear dollars, and if your global trade happens in dollars, so yes.
Okay. Thanks very much.